Hey guys, welcome back to a brand new video. I'm RexFinance, and man, has my portfolio been on fire this year. That's actually probably a really bad way to put it. Fire in a good way. My stock market portfolio's gone up a lot. I mean, we'd have some big problems if it hasn't gone up this year, let's be honest. Specifically, my portfolio's up about 100% this year, and keep in mind that we're only like slightly over halfway through this year, so we've doubled our money in basically half a year. It's been absolutely crazy. And yeah, it's pretty helpful that my largest investment is up almost 200% year to date, but along with CleanSpark stock, I invest in LICY, for example. LICY in its own right is up 27% year to date. And ever since I got back into workhorse stock, it's up basically 17 to 18%. I'm essentially up 20% in PayPal stock. And then I'm up like 50% on FLUX Power Holdings, which, by the way, thank you very much. I haven't been able to acquire as many shares as I wanted to because you guys are absolutely destroying my video that I made on FLUX Power stock. I use the word destroying, but I mean it in a good way. I'm using all these negative words in positive meanings. But this video has 8,500 views, 579 watch hours. I've gained 200 subscribers alone on this video, and I've made $65. So, you know, that's no pushover, right? And by the way, right now, we are the fastest growing stock market YouTube channel on the platform. If you want to join the momentum, hit the subscribe button down below. It's really easy and it's free to do. And I love seeing all the new faces, all the new commenters, everything. I love it all. But all of this being said, I owe you guys a tactical update on my portfolio. I need to explain what I'm going to be doing from here on out for the rest of 2023. Because we've had a historical year. This is not a year we're ever going to forget because of the gains we've already seen, and it's only the end of July. Over the past couple weeks, I have either slowed or completely stopped my buying of stocks. Out of the 5 companies I just mentioned, 2 of them I have completely stopped buying temporarily, and the other 3 I have slowed tremendously. Again, FLUX Power, that's kind of you guys' fault for bidding that stock price up before I could buy more. And I actually want to take you back to one of my tweets that I put out, or do they still call them tweets now that it's x.com? I don't know, but I'll say a tweet for now. If that changes or if it already has changed, somebody correct me down below. But I tweeted on September 22nd of 2022 at 10:32 a.m. to be exact. Prepare in the bear market, prosper in the bull market. During the bear market, I was doing some things that were very unpopular. I mean, I was throwing paycheck after paycheck after paycheck into these companies and into these stocks that I believe in for the very long term. I personally think that I did the first part very well. I prepared during the bear market very well to prosper during the bull market. We're in the process of prospering right now. My portfolio, again, has almost doubled 7 months into this year. Back in 2022, I even made a video on October 6th calling the stock market bottom. Now, if I tried to do this again 10 times, I'd probably be incorrect 10 times. But we absolutely nailed the stock market bottom. My video was titled "Stocks Just Bottomed and Nobody Noticed." This is the most disliked video I have ever made. And this was disliked because people disagreed with me. If we read through all the comments, which you can go do, if you want to watch this video, click the eye in the top right hand corner. One of these comments says, "Stocks have not bottomed, 3,200 on the SPY." Another person said, "The next big dip is coming." Glenn said, "No bottom yet." Mohammed said, 3,200 easy on the S&P 500. Another person simply said, "No, it didn't." And then my favorite one, somebody wrote out a whole paragraph saying, "Joke's on you if you buy right now." Was the joke on me? I would beg to differ, but he said it's just getting started, and he went into all his whole explanation about why the bear market was just getting started. And I'm showing you this not to brag, because again, I don't have a crystal ball. I've been wrong plenty of times in the past, and I'll be wrong plenty of times in the future. But I bring this up to further exercise my point that what I was doing in 2022 and what a lot of my followers were doing in 2022 was very, very unpopular. And what this all has resulted in is me basically draining my cash position because I saw the opportunity in the stock market And again, I literally put paycheck after paycheck after paycheck, whether that be from my YouTube paycheck, my farm paycheck, any source of income I had, I was plowing into the stock market. Right now, I'm down to about a 10 to 15% cash position, and I would like to grow that cash position back to 20 to 30% if possible. And this is a big reason that I have slowed my buying down. Lots of my stocks, as I already covered, are up 30% or more, and CleanSpark itself is up over 200%, which represents my biggest investment in my entire portfolio. This is also why I'm planning on keeping my buying somewhat limited for the next month or two. But maybe you're wondering why I don't just sell all of these stocks and take my quick profits, and it's a fair question. And the answer is very simple. All of these companies that I own, that I was buying throughout 2022, the dip of 2022, and basically the rise in the stock market to this point, I still believe all of those companies are tremendously undervalued. And no, there is no guarantee that we are even going to see a dip in the stock market. It's possible that the markets could continue to just move up in a straight line. And if that happens, I don't want to doom myself. I don't want to sell out of all my stocks that I'm up 30% on just to capture that 30% profit when I'm trying to chase after hundreds, if not thousands of percent return on the companies I own. I don't invest to get the breadcrumbs. I go for the whole loaf of bread. And most of the stocks I own fit into two categories. Either they are small cap companies or they're mid cap companies. Right now, the average forward PE ratio on small cap companies is only sitting at 14. Historically, the average forward PE ratio is between 17 and 18, maybe even 19. And although forward PE ratios are up from lows of around 10, they're still tremendously undervalued, meaning most of the stocks I own, even looking at this, not even just on my own opinion, but looking at historical data and the values that these companies have traded at, things are still very cheap for small cap companies. Large cap companies and big tech, specifically the mega cap 8, are overvalued right now, according to historical standards. But that's not true for the companies I own. For mid caps, it's a very similar scenario where the average forward PE currently is 14.2. That is sitting below the historical standard of 17 to 19 by quite a wide margin still. So small caps and mid cap companies, according to historical standards, are undervalued. Like I mentioned, it's possible that we won't even see a dip come in this stock market rally until we're well above all-time highs. And if that happens, I will still be a very happy investor because I prepared during the bear market. I have a lot of long exposure through my individual stocks still. I am not selling out of my stocks, and I have no intention of doing so anytime soon. And the way I look at it right now, it is a prime time to try and build up my cash position because I have this long exposure in the stock market, but I also can return 5.5% on my cash thanks to the interest rates being so high right now. So my cash is not going to be losing value. It in itself would be an investment. But in all honesty, I would be even happier if we do see some dips along the way in the stock market. And if I do get my cash position back to a place where I can comfortably buy dips when they happen, I'm going to be all that much better off. So because of the way I prepared in 2022, I don't see a downside to slowing my buying down quite a bit right now. However, I will say, when I see opportunities in the market, I'm going to take advantage of that. And we have a really interesting earnings week next week when a lot of high growth companies report their earnings. In particular, I'm looking at Wednesday. I see a lot of opportunity on Wednesday with the companies that are reporting their earnings, starting with PayPal. I already have a lot of exposure to PayPal, but I'm considering purchasing some call options, whether that be long-term or short-term calls. Shopify's another one, and Robinhood and Etsy also report on Thursday. If we go through this list, all of these companies are still severely battered from the bear market. PayPal's still down 76% from their all-time high. PayPal's not going anywhere. Robinhood, from its all-time high, basically right after it IPO'd, is down 76%. Robinhood, I believe, is in a very healthy position right now. They continue to gain market share, and this is an investment that I've yet to touch, But I'm interested in buying some Robinhood shares. Etsy is very similar to PayPal. They're down 66% from their all-time highs, and this is a $12.5 billion company. Etsy is not going anywhere either. And lastly, Shopify has actually climbed back more than any of the others, but it's still down 61% from its all-time highs. Shopify is an $84 billion company, and at some point in the future, I firmly believe Shopify could be a $1 trillion market cap company. All of these names are companies that I want to be an investor in for the long term, and I'm considering purchasing some short-term call options when they report earnings because they're severely battered down, and I think Wall Street's going to be surprised at how well these companies have performed. Now, there's no guarantee, especially over the short term, that I would make money purchasing call options on these companies. It's just a risk that I'm willing to take. I'm not a financial advisor, but if you want to follow along, join my membership down below. It's the cheapest one on YouTube, and it's the fastest growing in the stock market space, so just join. Either hit the join button or my Patreon link in the pinned comment. You'll get my buy and sell alerts. And something that's important to note is I never encourage anybody to invest in the stuff that I invest in because everybody has a different risk tolerance. Everybody has a different financial situation, and I'm very unique. I have a high risk tolerance. So just because I do something doesn't mean you should do that something. What I aim to do on this YouTube channel and in my membership is jog your brain, get your brain thinking in a way maybe you've never thought before. And I think based on our numbers, I've been very successful at doing so. But with that, I'm going to end this video here. I hope you guys enjoyed this. Leave a like down below. It helps out the channel tremendously. Again, don't forget to subscribe if you're new here or returning and not yet subscribed. Almost forgot what I was saying. I'm too young to forget what I'm saying. Anyways, have a great rest of your day. Stay blessed. Keep 10 toes to the ground. Chin up. Peace out.